you aspire to be a price action trader, proper recognition of supply and demand areas is a must. Today I'm going to show you how I draw these areas on the tick chart. My favorite way of identifying supply and demand areas is to utilize engulfing bars or large range bars, which sometimes can be one and the same. Now this method, as you can see here, I'm on the Dow 30, which is almost exclusively what I trade, and I am on a 144 tick chart. Okay, so for those of you not familiar especially with what this means down here, the tick chart, the bars are built basically on volume instead of time. So if you have a 1 hour, a 5 minute, 4 hour daily chart or whatever, each bar is built based on whatever time frame you're on. So if you're on a 4 hour chart, this bar right here took 4 hours to form, and then this new one started, and this one took 4 hours to form. The difference with a tick chart is that with this setting being on 144, this bar basically took 144 orders to form, and then this next bar took 144 orders before it formed and closed. This bar started at 0, and once 144 orders were met, this bar was closed out and the next one started. So the main difference with the tick chart is, and I trade the 70 typically. I happen to be on the 144 here, but the 70 tick chart, they move incredibly fast, and I don't know that you can really compare them to a time chart, apples to apples, but the 70 tick chart, when New York and London are overlapping, it can move along pretty quickly. The closest thing you'd be able to compare it to would be a 1 minute chart, but honestly a lot of the candles form, you might have 2 or 3 candles form in 1 minute in some cases. So if you get bored easily, and you like quick action, then the tick chart's where it's at, and I've just found that it fits my personality better. So an engulfing bar on the tick chart and an engulfing bar on the time chart is all the same. An engulfing bar on the Dow 30 is the same as an engulfing bar on a Facebook stock chart, or any Forex pair. Okay, so let's get that out of the way, that there's really no differences as far as all that's concerned. If you can learn to draw supply and demand here, the way I'm doing it, you can use this method anywhere. Once again, you can use it on stocks, indices, Forex, crypto, whatever the case may be. If you have a bar chart, this method's going to work. The reason I like this method so much, I have 2 or 3 different ways that I draw support and resistance, but my mentor happened to teach me this one, and I've just had, number one, it's easy to pick out engulfing bars, right? Or range bars, and I've just had more success utilizing this method than any of the others. So 90% of the time, this is the method that I've decided to use. So we'll go ahead and get started here. Just to save a little time, I went through, before I started the video, the recording here, and I just kind of marked. You'll see where these red lines are. I've marked engulfing or range bars. Now I'm not going to get into the technical aspects of what an engulfing bar is. You can Google that and look it up. But what I've found is that in most cases, you don't have to meet the exact to the T definition of an engulfing bar for that engulfing, or that engulfing bar, or what I call an engulfing bar, to form a good area of supply or demand. Okay. Same with the what I call a range bar. If you want to get technical about this, this bar probably is not. This is probably not a true engulfing candle, in that it's not eclipsing the prior body completely of this candle. But it certainly qualifies as a range bar, and as you'll see here in a second, it works pretty well for identifying a good supply zone. So How I do this is number one, I look for the engulfing or range bars, and then you simply want to take, let me get the crosshair so I can kind of show you in detail here. When it's a bearish move, which obviously this is, we have a strong, compared to the prior candles beside it, we have a strong bearish move to the downside. So just to the left, and almost in all cases, you're going to see that, you know, if it's an engulfing or a range bar that you're considering for a supply or demand area, you're almost always going to have the opposite move by the candle just before it. So here we do have a small bullish move, and what we want to do is we want to draw a rectangle from the, in this case, since this is a bullish candle, this prior candle is a bullish candle, from the open of that bullish candle to the high of the bullish candle. Now the high and the close happen to be the very same thing on this one, as you can see. But if we were using this, well, let's take this one. If we were using this bullish candle, then it would go from the open to the high up here. Your range would, instead of being right here. Okay, so just using the crosshairs here, let's take a look. So our first, you know, the bottom of our rectangle would be right here, the top of it would be right here. And what do you see immediately if you look right? You know, 7 or 8 bars later, we had a retest right here. And then what did price do? It went from here, and it just kept, you know, kept rolling. 94 points. So depending on how you manage your trades with trailing stops, or if you just go specifically for a certain, you know, target, 10 points, 20 points, whatever the case may be, and then also how you set your stops, which stops didn't really matter in this case, but you'll see later on down the road they do. You know, this could have been anywhere from a 10, 15, 20 point trade all the way up to, you know, whatever I said, 80, 90 points right there before price reversed and started going back the other way. So what I would do in this case, and it does get a little hairy on these tick charts at times, because sometimes by the time you can get a rectangle drawn, you know, price has already come back and hit that area. So you know, you have to move very quick, and this is not going to be perfect by any stretch, but we'll just go ahead and kind of draw this out and come on out this way a good ways, and there we are. Another thing I do want to mention is, and this is just the way I do it, you know, not everybody trades like this, some do, some don't, but once a supply or demand area has been hit, I typically don't consider it anymore. So in other words, you know, this price action took place, had this range bar, drew my supply area, and then a few minutes later, we had this wick hit, you know, and we're not going to get into entries necessarily, but yeah, I wouldn't enter this trade just because the wick hit here, right? You have to look for price action. You have to look for confluence with whatever else you use. For me, that happens to be the TDI. You know, I'm a big fan of the FXMath harmonic predictor, so I probably would have that on the chart, you know, and if I had a point C that happened to form right here telling me that there's a possibility that it's going to complete at D down here or whatever, then I might very well get into this trade. Once again, probably not right here, because I'm going to look at price action before anything else, and let's say that all those things did take place, I would probably be getting into this trade somewhere around the bottom of this strong bearish move right here, and then my stop, of course, would have to be back up in here. So okay, moving on to the next one. So let's see here, I'm going to remove this line because we do have a wick that's kind of not visible here if I keep that line there. So let's take our crosshair, and once again, the top of our zone would be at the very top of that bullish wick, right here under the crosshair, and the bottom of the zone would be at the open of that bullish candle, this one right here. So looking to the right, you can see once again, as soon as price revisits this area, you have almost an immediate exit and a gain of, you know, 42 points, which is you know, even trading a quarter or a third of a lot, half a lot is a pretty good trade when it's all said and done. So you did have a little bit of drawdown, not much to speak of, especially on a tick chart. Now on a 4-hour chart in Forex, you know, this could have been a 20-30 pip move to the upside. So once again, depending on your risk tolerance, you know, that's something you just have to decide on, depending on your personality and how you trade. But typically speaking, if you were to get into this trade right here, you would want your stop to be at minimum up here above this wick, a few points above this wick. So on a tick chart, we're looking at 10 points basically. So let's draw this one out here real quick. We're going to end up with quite a few rectangles here when it's all said and done. Just going out this way. Okay. All right, once again, you know, I only trade these areas once. So even though you had another good move here after it came up, and it came back down through and you know, picked up another good little head of steam. What you'll find out if we extend these out is a lot of times these zones are respected again, and you know, you'll see price pull back in. You know, as we're not far off here, as these two wicks did. You know, we're only 3 points off, and then take off back the other way again. So, all right, the next one we have is right here. And again, this is a bearish move down, so we're looking at the bottom right here of this particular. Let's move on over here. See what we have. We're looking at the bottom of the zone being right here, and the top of the zone being at the high, the very top of that little wick right there. So let's draw that out. And what you'll see here is this is one of the times, just like anything else in trading, that's a little bit off. So it's going to be hard to get it perfect, but just like anything else with trading, you know, you're trying to get the probabilities in your favor, right? So if you're trading just off these supply and demand zones, then even though this one looks like it might be about a 15-point winner, let's see, if you for some reason, if you found a reason to get in at the bottom of this zone, or let's just say you're just trading the zones, you're not using any other confluence, just, hey, if price hits the bottom of this zone, I'm gonna sell. You would have had about a respectable 19-point gain before, you know, that's the best it would have been, looks like. And you look up here, you would have had to have a stop in around the 8 or 9 pip area. That's pretty close, you know. Your stop would have needed to be at minimum above this wick right here, so you would have been pretty close to being stopped out there, possibly. But nonetheless, this one didn't work out as well. But depending on your risk tolerance, if you're looking for 10 points every trade, then hey, you met your goal and you move on. Okay, next. So we're gonna go here to here and come on over. Let's try to get this lined up. Boom, another perfect one. So price came back up, double tap to this exact zone here created by this engulfing candle, and looks like he had, you know, a 10 or 12 point move. Okay, let's look at a bullish example. So here, with this being a bullish move, we're going to have our zone at the open to the low. And you can see this one only took a minute. So so here's your engulfing bar, and then immediately on that next candle you had a test of that zone. Price rebounded, came back down, tested again. On the next candle it tested again, and then, man, just went on for days. So again, if you found a reason based on whatever confluence you use to get in at the start of this zone, as far as the screen goes here, you're looking at 178 points. And remember, this is a tick chart, so pretty nice move. Let's do one more here. So here we have another nice move up. And again, you can see, staying with the trend, price rebounded, came back down, tested this area, 3 or 4 different times here, and then took off. So a chance to layer on, add an additional position to what you had here, or maybe you got into this one late. This is your first entry. It looks like here, we had another entry right here on this bar, that continued taking off and going for you. So I think you get the gist of it. I had a few more lines drawn, but I think it's pretty clear how this method works. And that's just one of the ways I draw supply and demand areas. So I hope, as always, you found value in this video, and it helps you with your trading. If you have any questions, please don't hesitate to leave a comment below, and I will get back to you just as soon as I can. And as always, please hit the like button or subscribe if you'd like to see more of this content. And if you don't know how YouTube works, that's the only way that any video is going to show up besides a direct search for others who might find value in it, is by people liking the video, subscribing to it, and commenting. Those are basically the 3 main pieces of the algorithm that Google uses to search the videos and decide whether or not they're going to recommend them or not. And once again, all this content is provided free, so hopefully there'll be more who can find it and utilize it. God bless. I hope you guys have a great rest of your day.